Hello, traders. FX Pip Collector here. Today is Friday, January 10th, and we're going to be looking at the US dollar pairs, including gold and a couple of the JPY pairs. But also, don't forget to join my free Discord trading community. The community is 100% free. We have 5,700 members in the community. 100% free to join. You never have to pay a dime if you do not want to. If you would like to join my membership, then the link for that is at the end of this video and in the description. But the website is fxpipcollector.com, and you get access to all the benefits listed below for only $30 per month. So, anyways, one of the first things I like to do in the morning is definitely check out the news calendar. Today should be a pretty big day on the news calendar. We got Canadian unemployment change and unemployment rate, and then we got non-farm payroll, non-farm employment change, and unemployment rate this afternoon. Normally, this non-farm payroll is a really good news event. Normally, this is definitely a market mover. And then a little bit later on, about 90 minutes after that news comes out, we also have consumer sentiment and we have inflation expectations. So we have a pretty news-filled day today. So that's good for us because that hopefully will cause some volatility in the market. And without volatility, we really don't make a whole lot of money. So we definitely want to see some movement in the market. I'm starting off on the euro dollar weekly time frame. Just to show you guys that I do definitely still think that this here is a wave a wave B, and I still think this is likely a wave C. We are sitting at the 50% Fibonacci retracement on the last impulsive move up. We're also sitting at the 161 Fibonacci extension of what I believe is the wave A, projected off what I believe is the top of a wave B. So we are definitely at an area which could end up being the bottom of this move. Now, when I say we're close on the weekly, that doesn't mean that it needs to turn today or even this week. Close on the weekly potentially could be, 3 or 4 candles away. This thing could make like a doji candle, make another candle down, and then, maybe 3 weeks from now is when it actually starts its bigger turn to the upside. So we are getting close on the weekly, but close could mean, 2, 3, 4 candles away. So going down to the daily time frame, the trend is definitely down. There's no reason at all to say that the trend is not down. There's really no reason at all to say that we should be doing anything but looking for sorts on sorta time frames. Taking it down to the 1 hour time frame. Now on the 1 hour time frame, let me zoom out a little bit, move this over a little bit. So right now we have an impulsive move to the downside, as you can see. So far, we haven't broken these lows right here. So like I've been saying in my videos, this could be like a wave A, or maybe if we're lucky, a wave 1. This move down could be like a wave B, or if we're lucky, a wave 2. Now, the whole reason why I have zero desire to go long is even though it looks like a wave B or a wave 2, what could easily happen today is it goes up, bounces from a Fibonacci retracement, and then continues the downtrend. The trend is down on every higher time frame. If you're trying to go long, then you are definitely fighting the momentum of the market. Now, I have my Fibonacci retracement on just this move right here, because if it breaks this structure right here on the 1 hour time frame, then you'll know that this move down is over. So, really, what I would suggest is if this makes 1, 2, 3 waves up to one of these Fibonacci retracement levels of this last impulsive move down, and then turns, I would go short again. On the other hand, if it goes up and takes out structure, then you'll know that this move down right here is complete. And if that move down is complete, then we'll probably at least go up and take out these highs. So if it goes up and breaks structure, then hopefully you could get in on a pullback, especially if it's a three-way pullback and a little bit of a sort of time frame for either the wave C or the wave 3. Because like I said, this is either probably an A or 1. This is probably either a wave B or a wave 2. So definitely keep that in mind. Let's move on to the pound dollar. Let's go back up to the daily time frame because I really need to emphasize how important it is to trade with the trend. Yes, we are at Fibonacci levels. Yes, this could possibly be getting close on the weekly time frame to the big turn that we've been waiting for. Close on the weekly time frame means maybe 2, 3 candles away, which means this could possibly still be 2, 3 weeks away from making the big turn that we're waiting for. So the trend is definitely down for me unless on the daily, unless it breaks this structure right here. So keep that in mind. Let's take it down to the 1 hour time frame. So just like the euro dollar, as you can see on the 1 hour time frame, we have low, high, and then low. And now we're in between this low, high right here. So if the market goes up and breaks this right here, then you're going to know that this move down right here is over. If the market doesn't break that high, but instead makes one, two, three waves up to any one of these Fibonacci levels and then makes an impulsive move down, then you definitely should be going short. You would make so much more money if you just traded with the trend. On the other hand, if it does decide to go up, if it does decide to break this, then you'll know that this move down is over. If that move down is over, then it probably will make a run for these highs up here. So if it does break this structure, hopefully you'll get a pullback, and hopefully at the end of that pullback, you can get it long for the continuation of the uptrend. It would be so much safer to wait for a break of structure and wait for a pullback if you're thinking about going long. Otherwise, I would be looking for shorts right now at the end of three-way pullbacks and at the end of Fibonacci retracement levels. So let's move on to the Aussie dollar. Maybe all the dollar pairs are pretty much the same analysis if you really think about it. They're just a little bit different versions of the exact same thing. So moving on to the Aussie dollar. The Aussie dollar is definitely at the previous lows on the weekly time frame, which definitely seems like an area where this could turn. Definitely still looks like three waves down to me, so I still am definitely looking at this as probably a wave A and probably a wave B, and probably being close to turning up in a huge wave for a wave C. Just like the other pairs, when I say close on the weekly time frame, I still may be 2, 3, 4 weeks away from this bottom. So keep that in mind. Going down to the daily time frame, our structure level is right here on the daily. If price turns up and breaks that, then I definitely will start looking for longs at the end of pullbacks, 100%. But until that happens, we don't really know that the trend will end here. It could possibly just turn up a little bit, make another lower high, and just continue down for another several hundred pips. So we definitely want to trade with the trend as much as possible. Going down to the 1 hour time frame, pretty similar to the other dollar pairs. We got lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. We are currently right in between these two swings right here, if you'll notice. We're right in between those two swings. If price goes up and breaks this high, then I definitely would be trying to get in on a pullback, maybe on like the 5 or 15-minute time frame for hopefully the continuation of this move up. It could be a wave C or it could be a wave 3. If it breaks structure with momentum, that daily time frame structure, then it's probably a wave 3 and we probably do have the bottom. If not, then it might be a wave C and it might just end up going back down later on. But the reason why I have my Fibonacci retracement on just this move right here is because this could be just a little A, a little B. It could possibly just pop up a little bit, grab a Fibonacci level, and then just continue down for another several hundred pips. We want to trade with the trend until the market tells us otherwise, and the market definitely hasn't given us any reason, even on the 1 hour time frame. For me, I definitely don't even see a reason on the 1 hour time frame to try to go long. Even though I had this drawn up going to a fib level, I mean, honestly, it could just potentially just keep going down from here. So definitely be a little bit cautious on your longs, at least until we get a break of structure to the upside, which we definitely do not have as of yet. Moving on to the US dollar CAD. This has been a really good trade for me. I've been long on this since Monday. Definitely a pretty good trade. I think there's a pretty good chance it's going to break these highs, and I think there's a pretty good chance at this point it's probably going to go all the way up to probably about the 100%. Obviously, it's not just going to go up in one straight line to there. I'm sure there'll be pullbacks along the way, which is great news for us because pullbacks give us an opportunity to add to our position. So definitely, I bet long. The reason why I bet long is because one, two, three waves down, perfect ABC correction, especially on a little bit of a shorter time frame. And by the way, every single trade that I take gets shared with my members at the time of entry. I do not like to call it a signal service because the main purpose of my group is to learn. But hopefully, while you learn, you can earn a little bit by following along with some of my trades. So I went long on this thing way back here on Monday, way back here. I went long, and there's definitely no reason to get out yet. Higher low, higher low, higher low, higher low, higher low. I mean, this thing could easily just drift down a little bit. Maybe even it does break a little bit, reject structure, just keep on going up. So as long as this series of higher highs, higher lows continues, I definitely would be on the long side. If anything, it kind of looks like a wave one, a wave two. It kind of looks like we're in the middle of a wave three, most likely. Now, if it does go down and stop breaking structure, I will definitely take that as an exit. I probably will wait for the break of structure on the higher time frames before I start going short because it could possibly just, do something like this, break structure, and then continue up later on. So I personally will be waiting for the break of structure on the higher time frames before I start looking for any sorts. I am just going to hold on to my long that I've been holding on to since Monday. I'll hold on to this thing for weeks if I have to. So definitely still looking for logs at the end of pullbacks. US dollar Swiss is another trade that I've been in since Monday, another trade that I stayed with my group at the time of entry. I entered the market on Monday at the same time as I did the US dollar CAD way down here. Been holding ever since, and definitely no reason to get out. Moving on to the higher time frames, if we zoom out a little bit on the daily, I think there's a pretty good chance we're going to break these highs right here before we get any kind of a significant pullback. I think this is either a wave A or a wave one. Most of the time, wave A's or wave ones will take out the wave four of the previous trend before you get a bigger turn to the downside for either wave B or a wave two. And then potentially later on go back up for a wave three or a wave C. So we potentially might have a pretty decent amount of upside potential left. And on the 1 hour time frame, I mean, I'm not a short time frame trader, I'm a swing trader, but on the 1 hour, if it does start to go down and break structure, I would take it as an exit. But maybe other people could take it as a sorting opportunity. I personally will not even think about sorting this market until I get a break of structure down here and a pullback. So I have been holding on to a long since Monday, and I have no reason to get out. Higher low, higher low, higher low, higher low, higher low, higher low. This thing could easily just keep on drifting up today. With that non-farm payroll news, there's probably a pretty good chance it's going to do some sort of a spike reversal, probably some sort of a liquidity grab. So be a little bit careful. A lot of times that the non-farm payroll, the first impulsive move is not the real impulsive move. So if it goes down first, it's probably going to end up drifting back up. If it goes up first, it'll probably end up drifting back down. So the first move is usually just a trap for the retail traders. Moving on to gold, yeah, I mean gold. I've been talking about this all week about how if you are trading the very short time frames, you probably should be looking for longs. Um, I think that we kind of got to admit that the second analysis is probably correct on this is an A, and then this is an A right here. This is one, two, three waves down for a B, and we're probably just going to keep on drifting up for a wave C. And then this is going to be an A down here. This is going to be an ABC of B, and then eventually we'll get that big push down for the C. Probably all a wave four on the weekly time frame. So A, B, C of four on the weekly, most likely. Now, technically, the trend is down on this higher time frame, but you can't deny that the market momentum, the market flow is definitely up. And if it just keeps on going up, then hopefully you're looking for longs on sort of time frames. So anyways, go down to the 1 hour time frame. I'm still looking at it as possibly turning at a fib level, but I think the possibility of that happening is getting more slim and slim as it goes. I've been saying all week long that if you do trade gold on the short time frames, which I definitely don't, then you should be looking for longs. You should be looking to go long at the end of every single pullback. Why? Because it's higher low, higher low, higher low, higher low. There's been no break of structure even on the 1 hour time frame. Every single one of these little pullbacks made a higher low and just continued the uptrend. So definitely do not be fighting the trends. The trends are your friend. I mean, if it does go up to like the 78% and then give you a break of structure or any one of these Fibonacci levels, if you get like a break of structure, then definitely you could start going short after the break of structure, after you see a pullback. But because of my higher time frame analysis, I'm starting to think that even if it does go down, on this short time frame, it probably is in a big wave C of wave B on the daily time frame, which means it's probably going to go up and take out the previous highs at this point. So hopefully you're looking for longs in an uptrend right now. So anyways, taking it down to the US dollar yen. The US dollar yen possibly could make a turn, but it really isn't looking like it is. The structure level is pretty close. Structure's right here, so if it does go down to break that structure, then that probably is the end of a wave B, and it probably will go down in a big downtrend for a wave C. Now, on the other hand, on the weekly time frame, we do have a possibility that this is back into the uptrend, and the possibility that it's just going to keep on going up. Now, the thing I like to tell people is if we're in an uptrend and it's just going to keep on going up, what are we going to be doing on shorter time frames? We're going to be looking for longs. We're not going to be trying to go short. We're going to be trying to go long. Now, on the other hand, if this really is a wave B, what are we doing on shorter time frames? We are going to be looking for longs until we get a break of structure. So whether it's a wave B or whether it's a continuation of the uptrend, it does not matter because we are looking for longs on shorter time frames for either scenario. Going down to the 1 hour time frame, I mean, it definitely kind of looks like an ending diagonal or something, doesn't it? I mean, I could definitely picture this being like an ending diagonal, like this is a wave one, this is a wave two, this is a wave three, maybe this is a wave four, and then maybe this is a wave five, and maybe it really does turn down. For me, I would like to see a break of structure before I start looking for shorts. I have no problem waiting for it to go down, waiting for it to break structure, and waiting for it to make a pullback, which definitely won't happen today. Or I have no problem waiting for a Fibonacci bounce and waiting to go long again because right now I am doing nothing but looking for longs on these sort of time frames. Even though I think it looks like an ending diagonal on the 1 hour time frame, my analysis is all done on the higher time frames, so I really am not too worried about my Elliot wave count on these sort of time frames. All I'm worried about is trying to go long at the end of every single little impulsive move I see, or every single end of a correction I see, is where I will be looking to go long for hopefully the continuation of the uptrend. Or if it does go down a break structure, I'll be happy to start looking for shorts after the break of structure and after the pullback. So moving on to the Euro Yen. The euro yen is definitely in an uptrend and pretty much the same scenario as the dollar yen. I always consider the dollar yen more of a yen pair than a dollar pair because if you compare it to the yen pairs, it's almost exactly the same. If you compare the dollar yen to the dollar pairs, it's really not the same at all. But because this right here is the last high, that makes this right here the last structure level. We're not really going to know that this thing turns down unless it breaks this. This right here looks pretty corrective to me too, so I think there's a good chance that we are going to get another push up. I think we're going to at least break these highs, and there's probably a pretty good chance that we'll break these highs also. But if the market goes down and proves me wrong by taking out this low, then I will be more than happy to start looking for shorts after the break of structure and after the pullback. But right now, I'm definitely on the long side because the trend is up and the trend is telling me to look for longs. Going down to the 1 hour time frame. Now I have my Fibonacci retracement on the last impulsive move up. This move down so far could end up being a correction to this move up. So if we get a bounce at a Fibonacci level, if we get a breakup structure at a Fibonacci level, then that probably would be the end of a correction and probably would be the continuation of the uptrend. But we need to see that breakup structure. No breakup structure means no entry for me because it could easily pop up and then make a lower high and then bounce from a fib level, not break structure, make a lower high, and not break structure, make a lower high, and just keep on going down. So be a little bit cautious. I do think there's a good chance this move down is a correction to this move up. I'm watching very, very closely for a break of structure at a Fibonacci level. It definitely doesn't have to happen at the 61%. It could go down to the 78% and give me the break of structure. So definitely watching out for that. And by the way, today's non-farm payroll news will definitely be affecting the yen pairs also, because the yen is a risk on, risk off currency, meaning that it, depending on what the dollar does, the yen will definitely move also. Moving on to the pound yen on the daily time frame, the pound yen is right at structure. So if this does decide to break and hold below this structure, I definitely will stop looking for longs and I will start looking for shorts because then the wave B is probably over and now we're going down to make a wave C of this big A, B, C correction on the weekly, monthly time frames. But a lot of the times you'll get a break, but then it rejects structure and just keeps on going up. I'm kind of looking at this as most likely doing that because it kind of looks to like three waves down. We are right at the 50% Fibonacci retracement of the move up and the 50% Fibonacci extension of this last move projected off of here. So definitely could be an area where we get a turn back to the upside. moving down to the 1 hour time frame, we are right at structure right now, like right at it. If it turns up and breaks structure, then I'm gonna say that this whole move down is over. And if that move down is over, then it probably is a wave C, and it probably would be the continuation of the uptrend and a beautiful entry to go long. This over here would probably be the wave A, this would probably be the wave B, and this would probably be the wave C, and then it would likely just continue the uptrend from there. But we need to see that break of structure to confirm it. It could easily pop up, make a lower high, and then go down for few hundred pips for all we know, which is why we got to be a little bit cautious. We need to wait for more confirmation with a break of structure to really know that this move down is complete. So definitely pay attention to your Fibonacci levels. Elliott wave is a really important part of my analysis, but I put a lot of weight into my Fibonacci, and then I put a lot of weight into my structure analysis. If you pay attention to your Fibonacci levels and pay attention to your structure, and you know what a break of structure means and what breaks of structure are important and what ones are not important, then you're going to be trading in the correct direction most of the time. So, anyways, as far as all the rest of these Forex pairs that we have on the list, I do analyze every single one of these pairs on the list, including the Dow Jones, for my members. And I actually trade every single pair on this list, all 26, 27 pairs on this list. I do trade. Every single trade I take, I do share with my members at the time of entry. I do not consider it a signal service. I just consider one trader telling another trader, hey, I'm getting in this trade. If you want to get in, then you can also. So if you want to check out my membership, it is only $30 per month. It is highly focused on teaching, not just giving people the trades. If you want to join my free Discord community, then definitely do so. We have 5,700 members. I would like to build a community of traders that are willing to help each other out. So as always, thank you and happy trading to everyone.